Hello, everyone won't be too far away from starting. Just one more minute, waiting for a couple of others to join. We'll get going in one moment. Can someone from my team just message in the chat to let me know that you can see the presentation okay? Yes, we can see it. Beautiful. Thanks, Liza. So you're just seeing the webinar presentation, not the balance of the screen? Beautiful. All right, thanks everyone for joining tonight. We're talking about how to buy and finance or refinance a property in your self-managed super fund. So we'll get some of the dry bits out of the way first, and then I'm sure you just want to know what you can and can't purchase and how it all works. So we'll get through some of the compliance stuff first. Of course, you know me, Matthew Clark, Key Choice Lending, and we're authorised credit rep, and we've got our own credit license. We are not advising you to buy a property in your self-managed super fund, merely showing you how it can be done. You need to seek professional legal and financial advice. This content's general in nature, and you need personalised advice before you'll proceed. So what you'll learn today, self-managed super fund, how they work, why are people investing in property in their self-managed super fund, histories and trends of the self-managed super fund property lending, what you can and can't buy, and the legal structure. So it is both complex and simple in the same breath. The compliance requirements and costs and the step-by-step process. So we'll get going. Humble, I will put as many photos of myself as I can. We're Key Choice Lending, established 2001. That's me taking all the glory at the Better Business Awards 2024 for boutique brokerage of the year, and my team who are amazing in the background. So I better shout out to them. Isa and Win have joined us. So if you've got any questions during the webinar, you can feel free to put them in the chat at any time. So that's me. Ron, my business partner, works from the Coffs Harbour office. He's more experienced than myself, over 30 years in financial services, including financial planning, mortgage broking. Isa, the general manager, the mortgage broker with the most, and just incredible. Anyone who's dealt with her knows how important she is to our clients and the team. Super knowledgeable and responsive. Sally is a star, has held very senior positions with a number of the major banks and has worked with me for over a decade now and does our loan review. So as a client of Key Choice Lending, we won't rave on too much about us, but you get annual loan reviews to keep your costs down, your interest rate down with your existing lender. And yeah, we work hard for our loyal clients. Sally's in charge of that, and Win, accountant background, and is plying the trade. She's been our loan processor, meticulous with detail, moving up into the para broker, learning all about the products and the like. So that's our team. So, and how wonderful we are. Just check out our Google reviews. So let's get on with it. So what's a self-managed super fund? It's essentially people are moving from industry funds to self-manage, and as the name indicates, it's where you're in control of your fund. So unlike an industry or retail fund managed by larger institutions, you're in charge and a member of your own fund. Essentially, you can decide how your super is invested. The ATO do have preferences, but it's really not up to them. But you are responsible. You have a lot of compliance requirements if you're opening your own self-managed super fund. So why people choose self-managed super fund, that is pretty darn small. But anyway, so there's a number of reasons, but essentially people want greater control over their super investments. They might choose self-managed super fund. They may have run out of their borrowing capacity in personal names, and they might want to continue to buy property. So setting up a self-managed super fund is one way to do that. They might receive some tax concessions, and this is something you would definitely need to speak to your accountant about, but the income from it may be taxed at a lower level than if you're getting paid rental income directly to your personal name. There's a potential to purchase your own commercial premise that you're trading from. So essentially own the building that you're working from and be paying yourself the rent. It could be a way to get leverage into your self-managed super fund, into your super. So instead of just contributing, you're leveraging or borrowing funds against an asset, that being property, and a way to leverage. So, and there can be some asset protections, again, case by case example, but for having assets in your super fund, there are some protections afforded to you. So why some people choose not to, and a lot of self-managed super funds are set up and then they're closed again because people don't understand their responsibility. So there's higher setup costs and compliance costs. We'll go into that, and higher compared to what? Compared to your industry or retail funds. There's strict rules and penalties. So don't go getting your sticky fingers into your super fund, think you can spend it on yourself. The purpose of it is to build a nest egg for retirement. So you can't be using it for personal use unless you're in the pension phase. There's limited flexibility. So if you purchase property in your own name or other entities outside a self-managed super fund, you can often draw on some of the increased value of that property and make improvements, purchase another property, etc. Use it for additional security to build your property portfolio. You can't do that in a self-managed super fund. It's about purchasing, paying down, and owning assets in your super fund for retirement. And there's trustee responsibilities, and we'll go into that a little bit further. So a self-managed super fund can give you more flexibility in the fact that you can choose what you purchase in self-managed super fund. Doesn't have to be property. It can be shares. It can be other assets, anything that you feel will grow in value. But we're specifically focusing on purchasing property and financing that in the super fund. So it's a lot of words. We'll keep it relatively brief, but self-managed super fund is a LRBA, and that's a limited recourse borrowing arrangement. So that's a structure that you can borrow money against a single asset, and there's no recourse outside of that asset. So in America, you would have heard of those ninja loans when no income, no job during the GFC, and why they would get what they call jingle mail back in, which is people sending the keys back in to the banks. Walking away from that asset is because there's no recourse on a lot of the mortgages over there, whereas in Australia, generally the loans have recourse. And that is, if you walk away from your investment, they can chase you down for your other assets to make for a payment on any outstanding liabilities. Not the way it works with self-managed super funds. They are limited to the single asset that you purchase. It must be for investment. So I've heard it all. You can't buy a holiday house. You can't sneak into a property that you want to buy in your super fund and use it for yourself. You can't rent it out to your cousin. It must be an arm's length transaction. So it is purely for an investment vehicle. Lender's recourse, again, just to that asset. Loan repayments must come from the self-managed super fund's rental income and any contributions you make. So we'll go through the servicing later, but essentially you've got your property, you've got your loan against it, you'll get rent in, and other contributions that you make if you're self-employed to your self-managed super fund, or if you're an employee, your super will go to your self-managed super fund rather than the industry fund generally. And as I touched on earlier, it can't be used for personal use. It is purely an investment vehicle. So you've got some responsibilities as the trustee. So the trustee is like the adult in the relationship, and you will be the trustee of the self-managed super fund trust, either individually in your own name or as a corporate trustee. And the difference between the two is essentially, if you're borrowing money in with a self-managed super fund, they want a corporate trustee, because the trust can't make decisions for itself. It's like a child, and the trustee is like the adult in the relationship that can make decisions on behalf of the trust. The trustee, they want it to be a company, and in essence, you'll be the director of that company most likely. So your responsibilities, that's a long way around going around saying that you've got to have a strategy. You need to have a plan. All these things get set up if you decide you want to buy a property in a self-managed super fund. They're all set up at the start. So you have a meeting with either your planner or accountant. If you haven't got one, we can match you with one. You have a discussion around what you're hoping to achieve. It's noted. You need to make the repayment specifically from, you don't want to be paying deposits or things from personal accounts. It's all got to be set up first. So your self-managed super fund account and bank account needs to be set up. Your funds moved across from your retail fund. Let's say you have an ING self-managed super fund. You set up a self-managed super fund account with the bank, transfer the funds across, and all those transactions, because they're audited, need to come in and out of that account. You need to retain all your documentation for compliance purposes. So we're almost through the dry bit. Stick with us, but what's it actually look like? So essentially, you've got what's called a bare trust, not a bear, but a holding trust or bear trust that holds the property that you're purchasing. So we've got the example here, and as a trust, you need a trustee or an adult in the relationship. So you need a trustee company that looks after the bear trust. And so you've got that. And then over on the left-hand side, you've got your self-managed super fund. And you can also have a trustee for that. So I know it's convoluted in some sense, but once it's set up, it's fairly straightforward. So it needs to be set up correctly. that's where your accountant and financial planner come into the picture to ensure that that's set up correctly. There are some lenders who will set it up for you to ensure that it's compliant. If you have one currently and you're looking at refinancing, which we'll touch on later, they do need to be vetted. But the bear or holding trust is the legal owner of the property. You may not, I'm going to put you to sleep with this, but a trust can't go on the title. So again, if you think of it as a child, the adult needs to go on the title. So this trustee company is the borrower. It needs to be the borrower. And we do make note there is a trust involved, but the trustee company goes on the title. There's a lender, we've got lender in here, and we'll, as we go through the slides, you'll get to understand more where they come into it, but they essentially have a loan to the trustee of the Bear Trust, and the self-managed super fund is a guarantor. So that's how it works. Once it's set up, you'll know which account the rent goes into, where the loan is taken from, etc. But it is a challenge getting your head around it. So let's get into some more interesting stuff. So what can you actually do and what can't you do in a self-managed super fund? So you can buy residential property. So let's talk about your standard, your homes, your townhouses, apartments, units, or duplexes. You can do house and land, but it must be what's called a one-part contract. So you can't buy land and then construct a home. You can't do any construction at all. You must have things on one title. So a company or stratum title is where you may have a group of townhouses or apartments, and there might be 10 in the complex, and you buy one of those 10, and so you get a 10% ownership in the company or stratum title. You own 1/10 of it. You can't lend against that. The apartments or units, sometimes you'll have an apartment and you'll have one title for the apartment and one title for the car park. That can't, you can only lend against the value of the apartment in that case. So what may happen is you get someone who, if they're inexperienced, they might I want to buy an apartment in my self-managed super fund. I wouldn't recommended, but anyway, if that's what you want to do. And then if the apartment's worth 500,000 and the car space is worth 50,000, the value will come do a valuation. They'll see it's on two titles. They'll value it separately, and so you'll only be able to borrow against 500,000 against the apartment, not the whole value of 550. So there's a few limitations about what you can purchase in the residential space. Always best, if you're thinking of doing it, to reach out and we can have a discussion about what you're looking at. So accepted self-managed super fund loans with commercial security. So in the commercial space, lenders tend to lend different loan to value ratios against different types of property. So office or retail shop, definitely at the moment with that market down or depressed, they're lending sort of 60%, but they are lending against offices, and retail shops, depending on where it is, can get higher. Industrial or warehouse is really strong market at the moment. Medical consulting suites or specialized commercial premise, so childcare, automotive, that sort of thing. So they can all be used as a commercial self-managed super fund security for a loan. So it must be, as we touched on before, so it must be a single acquirable asset. So it can't be convoluted with one title for apartment, one for car space, one for storage unit. It can't have bundled in furniture packages or incentives. So critical that the asset you're purchasing when it's being funded against. And a reminder that we're talking about purely financing against it. I'm not saying that you can't buy these things in your self-managed super fund if that's what you want to do, but if you need to finance against it, it needs to be that single acquirable asset. So what's a no? Serviced apartments. Why is that? Well, when you buy a serviced apartment, there's a value on the apartment, but there's also a value on the contract associated with the apartment. So what if you've got a serviced apartment and the management company leaves, it can have a significant impact on the value of the property. Yeah, so we can't use that as security. Any tiny homes or relocatable homes, shared equity schemes, high density apartments can be a problem. It's on a case-to-case basis. So lenders will often have a quota of a percentage of any sort of development that they'll take on. So again, case by case basis, no over 55 lifestyle villages or retirement homes. Again, no company titles or shared equity schemes. So the lending by asset type. So this is a interesting one. So currently APRA have that residential properties are the key assets in self-managed super funds. I'm just getting the exact percentages here for you. Sorry, that is 72% for residential property. Yep. 3% for other classes and 25% for commercial property. So that's a rough guide as to the lending type by asset. So residential property leading the way from commercial property and other asset classes. So how much can you borrow? So we're getting down to 10 taxes. So mate, you've bored me senseless with the compliance stuff. Essentially what you need to understand is the structure needs to be set up right. You can't play, it's not play money, it's definitely for your retirement. So how much can you borrow? It's essentially 80% maximum for a residential property and 75% for a commercial property. Now, it depends. So your borrowing capacity is calculated differently than what would happen for a standard investment property. Standard investment property, you've got what's your income, what's your ongoing living expenses, what loans have you got. It's complicated. Well, with a self-managed super fund, this is where it becomes relatively simple. Your borrowing capacity is based on if the self-managed super fund has been set up, what income did it generate last year? Or if it's a retail fund, what income did it generate? What property are you going to purchase and what rent is it going to bring in? And what's the loan going to be? So it's really simple. So if you've got $1 million self-managed super fund, and you're going to use 500,000 of it to purchase, to contribute towards the purchase of an investment property, you might leave 500,000 in. You get your planner to do 500,000 of shares. You're going to put 500,000 towards an investment property worth $1 million. So how they're going to calculate your borrowing capacity is they're going to estimate the income that you're going to receive or have historically received on your share portion, what rent you're going to receive on your investment property, be it residential or commercial, and then what the repayments are going to be with a buffer and some expenses. So generally it's fairly straightforward to work out whether you can buy in your investment property. And some people who are property mad have filled their socks in their personal name. They can't borrow any more money, but they buy in their super fund because they just can't get enough of property. I'm not advising to do that, but that's just so you can see there's borrowing capacity in your personal name, and then there's borrowing capacity in your super fund. As touched on earlier, a commercial property, you may run a business and you might be have one of those frustrating landlords. You want to own that commercial premise for the future of your business, security, and then you can pay rent to own the property in your self-managed super fund and be paying rent to yourself, your super fund, instead of a landlord. So we'll talk about, can I refinance my self-managed super fund? Yes, you can, but no, you can't. So you can, and you just can't borrow any more money. So you can borrow enough to cover the existing loan and enough for costs. So it might be $2,000 or $3,000 to pay out your existing loan, set up your new one, and you can do that, but you can't get cash out. So your property that was worth $1 million now worth $2 million, bad luck. You just need to pay down the loan. A lot of the self-managed super fund loans that are over 3 years old are at really high interest rates. So if you got a loan from one of the major banks in your self-managed super fund, they're not doing them anymore. We're seeing rates for a residential property in double figures, so 10%, whereas you could be getting a self-managed super fund loan in the sixes. So those loans are just people aren't aware that you can refinance them. Definitely can, just can't get cash out. So the costs. So the costs aren't comparable to a retail fund. So it's more expensive, but it gives you control. So to set up a self-managed super fund, and this is just a ballpark estimate, trust deeds and registration between $800 and $1,200. You need to get an ABN number that's fairly straightforward, and corporate trustee between $500 and $1,000. So you're looking at a couple of $1,000 to set up. Then you've got your ongoing compliance. Your fund needs to be audited each year. Generally, you've got your accountant and they outsource the auditing of the self-managed super fund, which can be, it's usually around $1,500, but if it's much more complex, it could be up to $3,000 or more. But for your stock standard 1 or 2 properties, generally around $1,500. And financial advice, and this figure I'll probably get booed out of the webinar by the financial planners, between $1,500 and $3,000, but that's only specifically for this. You might need a transition to retirement or a complete financial plan. We're just talking about a specific property here, and that's a ballpark figure. So if you haven't set one up, you've got to be aware there's many more costs associated and ongoing costs associated with setting up self-managed super fund. So the loan, some of the lenders will actually set up the bare trust, the holding trust for the property, and we're estimating, and that can be from $0 to up to $2,000. Again, is it residential? Have they got a special on it at the moment, or is it commercial property? The lender establishment fee, we've got between $1,000 and $2,500. There actually, a few of the lenders have got a nil application fee at the moment. Valuation fee $400 to $800, but that's residential generally. It's closer to $400. Commercial, significant commercial properties can cost more than that, but we're talking residential property. And you need your documentation. You need your trust deeds vetted. You need your compliance certificate, etc. So that can be up to $1,000. So it again quite expensive. I've done them all with no need for advice. The client's accountant signed off on it. The lender didn't need an advice certificate. The lender did the trust deed, and the valuation was included. So we've done them, completed all for a couple of $1,000, but it could be up to 6,000 or 7,000 if it's a commercial, significant commercial property. You definitely need advice. There's a expensive valuation fee, so it's a range. So next, common mistakes. We'll often speak to someone. They've come to us and said, we're interested in purchasing self-managed super fund. Great, can we do it? Back of an envelope, yes, you can. And then we get a call, oh, we've purchased the property, but it causes all sorts of problems. This is one product that you definitely need to have a think about and get set up in advance. You need the fund set up so that you can purchase the property in the right entity first. You can't be signing it in your name and not have it set your bare trust and trustee set up. You need your self-managed super fund set up. People might purchase property without understanding whether they can actually use that as security. It could be wrong location, wrong title type. It might need work, or it might be livable, might be stratum titled. There's a whole raft of potential issues. Might be wanting to use it for the wrong purpose, etc. There is servicing in self-managed super funds, so it's not as if you're definitely going to qualify for a loan just because it's in your self-managed super fund. Worst case scenario, if the super fund hasn't got the capacity, we've got what's called below the line servicing. So with some lenders, they'll say, right, well, your super fund hasn't been set up long. It's got some retail returns. Servicing's not evident. We've got servicing, but it's not evident. Let's have a look at your personal circumstances. So in that case, we can get all of your personal incomes and liabilities, and if there's capacity to make additional superannuation contributions to ensure serviceability, we can look at doing that. It's not the preference, but it is a possibility. There's also, if you're self-employed, you can make some non-concessional contributions. Again, speak to your accountant about that, which might lower the loan amount you require and also enable servicing. So it really is a team. You need to get your right team around you to ensure you're getting the best advice and to facilitate what you want. So the next point there is engage your professional team early. So thinking about it, when you make that decision, you need to speak to your team members, and we'll get to that slide shortly. And you need to understand there's some self-managed super fund loans available to you, but there are some lenders who require liquidity. What's that mean? It just essentially means they need you to have a buffer available in the super fund. You can't use every dollar you've got to purchase a property with the loan. So that's the advice we'd give around which lender was available to you. Corporate trustees, I think universally across the panel of lenders that we use, are required. You can't be an individual trustee of your self-managed super fund. They require that to be a corporate entity. Who you'll need. So, of course, the greatest mortgage brokers in the world, if they're not available, you can use us. Old joke road, sorry. Then a solicitor, of course, financial advisor who specialises in self-managed super funds, and 80 Metrics. We've definitely got a conflict of interest because that's our sister company, but giving you advice about what type of property and where to buy. I'm often amazed that there's all these requirements around what you need to do to purchase in a self-managed super fund, to get up, to have the fund audited, and then people go out and buy properties without thought of what they're trying to achieve, what yields they require, what the socio-economic demographics of that area are that they're purchasing. Like, is there going to be the potential for capital growth, because the incomes of the people in the area determine a lot of that. What's the plans for the infrastructure, the rental yields, the vacancy rates, the approvals for building in the area. But there's a whole lot that goes into it. So speak to us if you haven't got any of the members of that team. So if you need a solicitor, if you need a financial advisor, if you need advice on where and what to buy, that's your team, and we can plug and play with your current team members. So question and answers. Do we have any question and answers? And when you are not allowed to ask a question because other people need to be able to be asked. Any questions? Ask away. How are you so good looking, Matt? It's just, I don't know, just amazing. Not even filters. Have you lost weight? No. Any questions? Waiting. Wilson Kill to win a premiership? Unlikely. Oh, well, I'm going to play on. Please feel free to ask any questions that you may have. We're not far from the end. In fact, next step. Yep. Okay. So it's a QR code there. You can book a consultation with us as a starting point, if you'd like, just to get an understanding of your position. Essentially, we'll want to know how much is in your super fund. We'll need 12 months of statements to understand where you are currently. If it's a retail fund, if it's a self-managed super fund, we'd like the last couple of years to understand where you're at. We can then give you a guide as to what's possible. We'll have the discussion with you about the risks associated with residential commercial property, the differences between the two. We can then talk to you and meet with your accountant, financial planner and solicitor, even have a group meeting around that. It's critical that as this is your future, this is your retirement, that these purchases are made with all the information possible, carefully and personalised for your circumstances. So please feel free to book a meeting. There's a self-managed super fund borrowing calculator on our website. Jump on there. Thank you. There's the disclaimer. This was general advice. I'm not telling you to go and buy a property, but general advice. We need to understand your personalised circumstances. You need a team of people around you. Although there is complexity on how the structure is. I've got a question from Brooke Robbins. I'll get to that one sec, Brooke. So although there's complexity, once it's set up, it looks after itself. Oh, this is a great question. Is there a minimum figure that you should wait until you consider starting a self-managed super fund, noting the costs involved to set up? What a terrific question. Well, I had that the ATO, who are not don't lord over everything to do with self-managed super funds, they don't like it if the only asset that you have is one property in your super fund. I don't think there's anything they can do about it, but I had a financial planner colleague of mine said the ATO can go away. It's not up to them. It's about our plan. So that's, in one sense, they don't want you just to be getting all your super and purchasing one property. Having said that, you're talking about the costs involved, and they're significant. So if you're purchasing property in Victoria and it was a $500,000 purchase, you've got 25,000 in stamp duty, and let's say it was another 5,000 to set up your super fund. You really need to understand that how long is it going to take to get a return on investment. That's a property is a long-term hold, and then those ongoing fees. So you're going to have your accounting fees and your audit fees. So the answer is we need to understand what you're going to buy, what the return's going to be, and of course, if you've got a small amount in your super fund, say $100,000, $200,000, it starts to be the economies of scale state. You want to have a really good investment to make it viable. Once you start getting over the $200,000, it seems to be at that point that it makes more fiscal sense. But there's no hard and fast rule. Essentially, the minimum amount you'd possibly purchase is $500,000 for investment property if you're buying something for capital growth, so with a bit of land, etc. So the very minimum purchase price, 500,000. In that case, if you could borrow 80% against the value of that property, that means you get a loan of 400. So then you would need to have 120,000 to complete the purchase plus a bit more. So you're looking at 140,000 as a minimum in your super fund. So you want to be over 150, and definitely once you start getting over 200,000, that's when it seems to make more sense. It also depends on if you're going to buy residential or commercial, or if you're going to buy for your own business premise. It might be, the numbers might be slightly different, but great question. If you've got 100,000, probably not enough is what I'm saying there, Brooke. Any other questions? No, that's not my dog. My dog is much less attractive, Miles, but I love him. Staffy, much the same. Isa, who's in here, has 5 dogs, I think. 4 or 5 dogs. Any other questions? Nothing. Well, thank you, beautiful people, for joining us. Sorry, it's just the tip of the iceberg. It's just trying to get your head around what is possible and what is not. We will be sending up a follow-up email with some notes from today's session. Feel free to book in, even just to touch base on your circumstances. What do you think about this, that, or the other? What are possibilities before you go racing off down the track? Financial, if you need to speak to a planner, will I be sending around the recording? Yes, we'll send around the recording. Brooke will send that. It might be tomorrow, because my team are going to kill me if I make them stay any later than this. But hopefully tomorrow is okay. And yeah, we'll send around the recording. Yeah, but if you need any other professionals, please reach out. And that is all. Have a wonderful night. If you're in Victoria, stay warm. If you're in Coffs Harbour, damn you people, it's beautiful up there. And we'll speak to you soon. Thanks for your attendance. Bye for now.